Is good evening, 6:50 p.m., the 8th of February, excuse me. We are looking at ticker symbol AZERO / USDT. Ticker symbol AZERO USDT. We're looking at a daily chart. This thing is currently down 2.86% at the moment. Once again, it is Wednesday, the 8th of February. A little bit of a rough, rocky road today in the markets. Definitely in the stock market futures. They got whacked pretty good. Cryptos, a lot of them got hit pretty hard. A couple held up quite well, actually. Pretty impressive for Casper. And actually, this one actually looks pretty good too as well. So, a couple things we want to share here on the charts. Excuse me. We have a confirmed uptrend. So, it's been a while since I did a video on this. We have a confirmed uptrend, a series of higher lows and higher highs, higher lows, and so far a high put in place on the 30th of January. So that is what is currently taking place real time here. We have a confirmed change in trend that took place basically on the, let's see here, the 19th of January. We put in that higher low and then we rocketed higher. You'll see that a lot. If you pay attention to charts, you'll see a critical moment in time take place, and then usually the move to follow is pretty vicious. So let's take this for example. Let's take a step back real quick, then we'll get back into some more up-to-date stuff. So let's look at right here. We have a lower high take place right here on the 22nd of August, right? Pretty steady decline. Not pretty, but decline to follow. Massive rally to a higher high, but a big candle wick with a lower close on the 11th of September. That is right here. And what followed that move? A vicious decline. So you'll see a critical moment in time, and that's what this was. This could have been a confirmed high. Well, it was a higher high, but it was a lower close. So instead of it closing above this high, which was the 22nd of August at $1.38, it closed on the 11th of September at a $1.30. So that was a failed breakout and a vicious decline came to follow. Keep that in mind. So let's go over to here. We had a lower high right here. So that was a failed breakout past this high over here on the 14th of December. Decent little pullback, nothing too crazy. But then we put in this candle right here. This was a bullish candle right here on the 19th. And that was a critical moment because that candle could have, or the next day or even this day, could have continued lower and put in a lower low, and we would have a new downtrend in place. This critical moment in time right here was followed by a vicious bull rally to the upside. So I always try to stay ahead of the market and read the market day by day. Try to keep the opinion out of it. Usually doesn't help. Just read what the market's telling you one day at a time. So this day right here, the 19th, we didn't know that that was the bottom. We kept close eye on it. The next day was bullish, and then we got a really good confirmation on the 21st. The same thing could have happened here on the 17th. Nice long wick there on the candle. The next day, it didn't happen. You got to just read the market day by day. At least that's what works for us. Market's telling a story every day. So getting back to recent times, we are getting a pullback right now. I have a level under my chart as, well, it was resistance. You see right here on the 23rd of January, it was resistance. The market wicked up to that level, pushed back down, traded sideways for a bit, actually broke above that level right here on the 29th. And it's been a little bit volatile in and around that level since then. So as the markets pull back, they are continuing to pull back right now. We'll see how Bitcoin closes. We could pull back to that $1.26 and a half range, which is this white line on the chart. Now, if that happens, you want to see the price close above that level. We can get a candle wick below it, but ideally, you want to close above that. You want to be confirmed that that is support before you step up to the plate and start buying. Of course, it's not financial advice, but this is what I would be looking to do if I was looking to get in and trade this, which I am not. I am just doing this video for a viewer, or probably more than one viewer. So that is an important area, $1.2650. I would keep an eye on that as the price pulls back. If the price starts to rally and doesn't get there, keep an eye on this level right here. This is, let's see, $1.4910. A break above that would be quite bullish, very bullish. And then also let's look for a new high here above this level here. What is this here? The 10th of August, $1.59. So very important levels to the upside for the bulls. If one or two of those levels get broken, should be a straight shot to $1.69. Now that could be some resistance right there at $1.69. It's definitely a target of mine, but I think it could act as some resistance for a period of time. Above that, we have two levels right next to each other, clustered together at 205 and 206. Those are next in line, assuming we get above and turn support at $1.69, as well as these two highs. Keep those two highs in mind. 205, 206. And then for the Super Bulls, I have a level up here at, let's see, 257 is that level. 257, that is way up there. For fun and for the Super Bulls, that would be a roughly 88-89% higher than where we are currently at today, which is, or right now I should say, $1.3605. Guys, this thing could be, and it almost has a look to it, a giant basing structure here. Maybe it's a cup with handle. Maybe we're in the process right now of building that cup, the handle, on the cup. If that's the case, I would be looking for a huge bull move to the upside, easily getting up to that $1.69, 205, 206, and perhaps even higher up there to the 257 range. Now, if I'm correct here, the depth of the cup is a target you can use for the breakout. So if we take roughly the top of the cup down to the bottom, which is just about that, you could call that, let's see here, 80, we can call that 80 cents. So if we take our measurement tool and we'll take the entry of the cup, which would be so far this high right here on the 30th, and then we can, let's see if we can do this here. This high is, for some reason, it's not showing up. Let's see here. This high is, so the entry for the cup with handle would be on the 30th. That high, which would be $1.49. So let's do a $1.49. And let's go up roughly, what was it, 81 or 81 cents? So that gets you up to $2.30 roughly, give or take a couple cents. So you can see that it's right in between our 257 and our 205, 206, basically right in between that. That would be a very, very good move from this cup with handle breakout, assuming this is what it is. It has a look to it. And that would be on a return basis, percent basis, in the 230s. Call it a 70 to an 80% return, guys, if that move took place. Like I said, I am not in this, although I might consider buying this if we start to move higher and get towards that entry at $1.49. And if I was, I would be looking first off at my targets at 169, 205, 206. And if those get broken to the upside, 230 or so is a full move based on this pattern right here. The depth of the cup is 80 some cents. That brings you up to that 230 range. Keep in mind, I have an upper target at 250 and one right below that at 206. So that falls where? That falls right in between our two upper targets there. Not financial advice, not saying it's going to happen. Depends on what Bitcoin does. If Bitcoin can't get its act together and stay above 22,500, it'll probably head lower and drag the rest of the markets south with it, at least for some period of time. Check out the Bitcoin video I posted today. I will leave a link actually right up here if you want to check that video out. Thanks, guys. Appreciate it. If you are not yet subscribed, consider doing so. Hit the thumbs up. Let me know your thoughts in the comments. You guys have a great evening. All right. Take care.